Hi traders and welcome to the Technical Analysis Market Watch on Friday the 16th of January. So I've seen some pretty good action on a lot of the key indices and currencies this week. A lot of volatility going on in the world with some important information and news coming out. So let's jump into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and this is an interesting one because I think it's done all we've needed it to do in terms of finding support at the right place. We can see that we had basically a recent high of nearly 67.80 not that long ago, only a few weeks ago, and it's come back down, tested a role reversal zone. This level here at the green line is a very important one because it was a resistance prior at around that sort of September, early October time, and it's proven to be resistance there again here over in about the middle of December. And as you can see, it's found itself here resting over the last probably week, really, finding support here at this level. But just as importantly, though, we've got a 20 moving average catching it up. Now, it's been in play, obviously, since we started the move up and got past it in late November of last year. And we can see here that it's starting to react strongly off it. If we go to a smaller time frame, I think that gives us a better indication of what's happening. You can see this is the line that we're talking about, hovered underneath it for a little while, and then we had the big higher high, higher low sequence. Now it's doing another little mini test of a role reversal zone on a 15-minute chart. And if we see a break above that sort of 67-ish area, I think that you're starting to look good for a long move, like we talked about last week, really, probably up to around that sort of 69, 69.50. So a reasonable opportunity to trade on the Aussie USD. It's doing all the right things in terms of resting at a role reversal zone and a 20 moving average. So a really good catch zone for it. Ideally, in the first instance, I'd be probably looking for the previous highs to take profit for a short-term scalp, but the bigger picture stuff is around that sort of 69, 69.50. So reasonable movement potential. If, of course, it rolls over and is trading below that 66, probably 60 really, underneath all this area here, then we'll look at it with a different lens and probably start looking at that 66.20 as the next target. But at this stage, we're looking okay for the long opportunity. We'll go over to the dollar index now, and we can see here there's been a pretty strong week. We had a little bit of backwards and forwards thing at the start of the week. You can see where every candle was being replicated in reverse, but we had a good breakout in this last session. It broke through these highs, couldn't break past those highs all week at around that 99.30 level. You can see all of the intersections here, and then in this session here we saw the big move up, and we're all of a sudden trading at 99.50. Still a little bit short of the 69, sort of 70-ish area where we think there's a bit of resistance, but it's not very far away from it, and I do like it for a test of these highs if we can get a break past there. But I think, again, even on the smaller time frames, I think if you go back and see, you'll see some opportunities to actually get in. You can see that we obviously started to cruise up, higher high, higher lows all the way up through, following the 20 moving average, pretty straightforward on the dollar index, which of course the ideal trade there is a short on the euro. The other important thing we've got to remember is we're about to get a 20-50 moving average cross, and it happened not that long ago, but now we've got proper momentum on our side. So we can see we had a big momentum spike, and we're about to get that cross. Nothing short of a catastrophic fall would stop that from crossing now. And that should is in good stead in the next week or two to start seeing a little bit more power in the dollar index. So that would be the plan on that one. I don't mind it. I think it's got some good opportunities to get some good shorts on the euro if we do get, especially if we get past this 99.70 area, a break past there, and it starts to look really good for the next move. All right, over to the S&P, the all-important S&P. We saw this is also creeping up. You can see we've got the higher high, higher low sequences happening. Pull back to a 20 moving average. The 20 moving average again did its job. You can see here that it tried to sell off a little bit yesterday on a little bit of uncertainty, but now that it's caught itself back here on the 20 moving average, it did react. It sold off a little bit from its highs around that sort of 69.77 of the session, but here we are now back at around that sort of area, 69.50. We know that there's a bit of resistance at this point here. Only recent resistance, of course, because it's the first time it's been here. So you can take that with a grain of salt. It looks like it's slowing down. I think that the momentum seems to be shifting a little bit in terms of, we know that we're at a very, very important juncture at an all-time high, round number of 7,000. There's a lot of things actually saying that, we've got potential problems moving forward from here. And I think a pullback is probably more of a better trade. I'd rather see the pullback as opposed to a push up further at this stage. I think there's actually more potential there. And if we get it back down to around that sort of 67.50-ish area, that would provide a far better long opportunity. So it's more about, it's not really so much having a bias as to what you want to happen. It's about really checking out the best opportunities to get a good trade out of it. And really a short trade would benefit us more because we'd be able to short it down to this level here, and then we'd be able to potentially long it back again if we get a turnaround at that role reversal zone. So that's what's really important in that regard. Again, 20 moving average doing its job. So we'll see what it gives us next week. While it's trading above the 20 moving average, I'd be looking at highs of 7,000. I'd be looking for that level for short-term scalps. But if in the next session we close below the 20 moving average, I'd start to target the 67.50 as the next probable target for the short. Both of them, reasonable trades. I'd be happy to take both of them from a technical standpoint. I don't think there's any issues there. All right, let's move over to oil. And oil's been one of those ones where it's been fairly volatile this week, as you can see. We saw an extraordinarily large wick candle. Yes, that's a doji candle, no doubt, but the wicks on either side were very, very extreme. So there was a lot of noise inside that daily candle, and it effectively gave back everything that it gave back everything today that it actually went to on the short side. You can see that yesterday's wick, the short wick, was effectively replicated today, but actually closed at that point. So look, there's no question it's at an important zone here. Not as important, I think, as that 56 to 57 level. That's where the real support is. And if we see further weakness, I mean, if we start to trade underneath the 50 and the 20 moving average on the next time frame, I'd be starting to look back down to around that sort of 56, 57 as a target for the short. But I wouldn't be looking much past that because I think there's very, very heavy support at that zone. If for some reason it starts to turn around here and we start to see a series of higher highs and higher lows, and the 20 and the 50 moving average actually hold up price, which is obviously a possibility. If it does that, I think that we've got another potential move back up to 60.50 and a break of that again, and we're on our way to 62.50, which is our target that we've been really looking for all along, and it nearly got it there on that spike. But now it's sort of it's a bit of a do or die time for it, really, because there is quite a bit of support here at this level, not just the 50 and the 20, but also some price action support. So if it holds up here and starts to rebound, 60.50 in the first instance, then up to 62.50 is the next secondary target. But if it breaks through and all of a sudden it's trading at 58.50, I'd be looking probably for that $1.50 to $2 move down to around that 56, where the very, very heavy support is around this level here. These two troughs here have got very, very solid support there and has been for quite some time. All right, we'll move over to Bitcoin, which has been a very popular one recently. This is an interesting one because we are seeing a series of higher highs and higher lows now. There's no question about that. For all of you who caught the webinar on Tuesday with Tom and myself, we talked about its next potential target around the 106. It's still a very valid target, given that there's not a lot of noise in between where price currently is and where that target is. And this is what we like about it. There's not a lot there. Sure, there's a little bit there around that 101. We can see a bit of resistance there. But if enough momentum picks up, I think it could blast through there and look for that area. That's why we said look for the break above these levels, and it's done that now. The important thing is too, we're also going to get a 20-50 moving average cross pretty much right now at a very important level as well. So this momentum, even though we've got the higher high, higher low, it's also being backed up by basically a moving average cross, right? We can see that we've got the 20 and the 50 about to cross higher, which is a really good sign for it. The idea is to go to the smaller time frames and look for opportunities on the pullback. So you can go to a 15-minute or a 1 hour. That's a bit messy now there because we didn't see that. But if you go back to when it actually broke through, which is where the trade really was, you can see that the higher high, higher lows were in play all the way up, touching the 20 moving averages, which is all really good. Even on the 1 hour, you can see quite a bit of that action, higher high, higher lows, pull back to a 20 moving average, bang, off it went again. So a small changeover in, you can see the 1 hour here, you can see a low high, lower low sequence, but that can be arrested fairly quickly. And if it's going to arrest, more than likely this level here at around that sort of 95-ish is probably going to be the go. If it turns around here and gets up above this level here at around that 96, I think we're looking okay for a long move up. Again, the first problem area is going to be 101. That would be the area I'd be looking for the first resistance, which is around the, you can see here, around these lows here, where this price action is and where these ones are here. That's the first target. And if it gets past that, I'll be targeting the 106. All right, team, thank you very much for joining me today. It's been a really interesting market this week. We can see that we've got quite a bit of action going on in terms of all-time highs and very key levels. Let the news come out. We've seen some of it already, but we'll let the next session play out in the US. And I would say early next week, I'd be starting to trade whatever direction the trend starts to move in on all of the majors. I'd be just following it to the key zones that we've talked about today and let the market unfold, and we'll play the game accordingly.